Hi, I'm Dongshan. Welcome to Dig Into China, where we explore China in depth to reveal unique perspectives. Recently, discussions have emerged in China suggesting that Xi Jinping has eased the restrictions on public discourse. It's said he has now opened to hearing diverse opinions, including negative views about the economy, to make more measured and objective economic decisions. For example, Peng, chief economist at Northeast Securities, has become a sensation on Chinese social media. Nationalist netizens often see his comments as overly favorable towards U.S. and Japan, while pessimistic about China. Yet his remarks continue to spread widely within the Great Firewall, creating the impression that China might be loosening its grip on free expression. Interestingly, Shanwen, chief economist at SDIC Securities, recently had a bold article circulating within the Great Firewall. In it, he openly claimed that China's GDP is overstated by 3 percentage points and that unemployment figures undercount by 47 million people. Why have these prominent chief economists suddenly become so vocal? Could it truly signal a loosening of speech controls within the country? Around the time these comments were gaining traction, the renminbi exchange rate slipped below 7.3 and the 10-year government bonds yield fell below 2%, both signaling a downturn in China's economy. The central bank chose neither to defend the 7.3 exchange rate threshold nor to boost bond yields for appearance, leading many to interpret this as Xi Jinping taking a hands-off stance. Consequently, the tightening grip on public discourse also appears to have relaxed. Is this interpretation accurate? I don't think so. What appears to be a loosening of speech control is likely just minor lapses caused by insufficient local stability maintenance funding. When it comes to economic discourse, I'm convinced Xi Jinping would never genuinely ease restrictions. Allow me to elaborate. By the way, before I record this video, the remarks and articles from these two economists had already been censored. First, it's important to understand who economists like Peng and Shanwen serve. China's wealthiest high net worth clients, including both institutional and individual investors. If their statements were at the level of the nationalist influencers on Weibo, constantly railing against American imperialism, I can confidently say that these wealthy clients would have long since abandoned them. Moreover, Peng's comments were directed at the private banking clients of foreign banks. Who are these clients? They are individuals with daily assets exceeding 10 million yuan in their bank accounts. Think about how many people in China have that much money. What do these clients want from a bank? Simply put, investment growth. To meet their needs, you must provide highly professional investment advice. Playing the patriotism card won't work with them. The key is to speak the truth. If you can help them grow their investments, you will keep them as clients. Otherwise, they'll easily switch to another bank. Many well-known foreign trade companies along the coast are owned by individuals who are private banking clients of major banks. What matters most to them is the real situation in the investment market. For instance, they are particularly concerned about the renminbi exchange rate because it affects their timing for converting foreign currency. If the renminbi is appreciating, they will quickly exchange their dollars for yuan. If there is a downward pressure on the currency, they'll wait, keeping their dollars. In these situations, you must provide objective, professional analysis. You can't just promote patriotic sentiment and claim the renminbi is strong. If you do, they will quickly leave and switch to another bank. This is why the financial system has so many rebels. It's a place where money is concentrated and no one wants to risk their wealth. When Peng speaks within the private banking sector, he's addressed a small group of wealthy individuals. There are no naive patriotic netizens here, just sharp investors. As a result, he has to speak honestly and offer investment advice grounded in reality. He never intended for his comments to be heard by all of China. His assumption is that if you don't have at least 10 million yuan in savings, you shouldn't be listening to his advice. That's why Peng's remarks are presented as a transcript from the live event, Recording or filming the event was in principle not permitted. Of course, Peng was somewhat prepared for his remarks to get out. If you've seen the transcript, you will know that he mentioned it himself. While recording and filming were prohibited, he knew it was probably inevitable. After all, his previous speeches and the recordings have already circulated widely on YouTube. He is aware of this and even joked that those versions were pirated, with people making money off his videos and the recordings. He also mentioned that he speaks very carefully and cautiously. As you can see, he's already toned it down. If he spoke about China's economy the way I do, he'd have long been severely punished. Even with his restrained approach, his remarks have caused a major stir in China. So how does Peng manage to navigate this balance? My guess is that first, given the tough economic climate in recent years, he feels the need to make slightly more outspoken statements to raise his profile, which he has been doing for some time. Second, after September, with state media and the central bank acknowledging some of the challenges, he likely feels it's okay to address certain issues. So it's not that he's particularly bold or daring to challenge the limits of China's media control. Rather, he's simply speaking with a private circle. Even if his comments accidentally gets leaked, he believes that considering the new red lines after September, his remarks are cautious enough that there shouldn't be any significant issues. Spending too much time within his own circle, especially in the financial industry, where many are skeptical of the system, Peng may think he is being cautious. But when addressing people with over 10 million in savings, his comments may not be received the same way outside that circle. His speech has reached many who don't have that kind of wealth. For example, the little pinks, those extreme nationalists, likely don't have 10 million yuan, and hearing this will definitely hit hard. It's likely to sting deeply. Not just the little pinks, but many middle-class individuals are probably feeling the same way. But this is the reality of Chinese society. The truly wealthy have never been little pinks. In fact, it's often the people who can't even meet investment threshold who are the most fervent nationalist supporters. The rich profit by turning the poor into little pinks, while within their own circles, they discuss views like Peng's. If the little pinks don't recognize this, they will never awaken or accumulate wealth. Now let's take a look at the stock, bond, and foreign exchange markets. These are real money markets where nationalism and the political correctness don't hold any weight. For example, why has the yield on China's 10-year government bonds dropped below 2%? If you check the central bank's publications from 6 months ago, you will find that in the Financial Times, a mouthpiece of the central bank, they misled the public by claiming, based on expert calculations, that the reasonable yield range for 10-year bonds was between 2.5% and 3%. Keep in mind that these statements are made by state-run media aimed at the public and should be viewed as akin to the evening news with a political agenda behind them. Now, 6 months later, the 10-year government bonds yield has fallen to 2%, which directly contradicts the central bank's earlier predictions. This shows that what's said to the public, particularly by state-run media, is often misleading. If you had followed the central bank's guidance and made investment decisions based on their forecast, you would have shorted the 10-year bond when the yield dropped to 2.5%, trusting that the central bank would intervene. But now, if you had done that, you would have been losing money. The market is clearly full of savvy investors, and no one is buying into the central bank's narrative. Instead, people are flocking to government bonds, driving yields even lower. Why is this happening? Because confidence in China's economy is at all-time low. Right now, government bonds are the safest asset in the country. Stocks and real estate are considered too risky. As a result, the capital is pouring into government bonds, which is pushing down yields. The underlying message is clear. The economy is struggling and there is no other reliable investment options. Yet, in the eyes of the little pinks, these investors are seen as anti-government for betting against China's economy and defying the central bank. Then there is the foreign exchange market. The yuan's exchange rate is clearly headed downward, and the central bank has openly stated in its third quarter monetary policy report that it can't defend the 7.3 level. If businesses involved in foreign trade believe the yuan will continue to weaken, they will hold off on converting yuan into dollars and keep their dollars. At the same time, wealthy individuals in China are rushing to exchange yuan for dollars and buy dollar-based assets, which only accelerates the selling of the yuan and drives the exchange rate lower. These wealthy individuals have never bought into the central bank's narrative. They don't believe in the yuan's internationalization or in the idea that the yuan's value can hold steady in such a poor economic environment. So, are they considered anti-government for not trusting the central bank's message? When it comes to A shares, anyone who has traded them and still clings to the nationalist narrative really needs a checkup. The A-share market has always been about state-backed funds profiting at the expense of retail investors. Fewer than 10% of retail investors actually make money in A-share. Right now, those who are stuck in the market are all hoping for Xi Jinping's early departure, as they believe it would be the biggest boost for A-shares. So, are they considered anti-government for holding such views? When it comes to controlling discourse, we shouldn't be too hopeful. In China, promoting a positive outlook on the economy is considered politically correct, and that's unlikely to change. Try criticizing China's economy on platforms like Weibo or Zhihu, and your posts will likely be deleted. Even someone like gymnast Wu Liufang has had her live stream banned and reinstated, which shows that any commentary on the country's worsening economic situation will be closely monitored, unless the censors are overwhelmed. As I mentioned earlier, these are just occasional glitches due to a lack of local stability funding. If a serious public opinion issue arises, the government will step in right away. A few economists from securities firms have recently shared some research or made statements, but these are primarily aimed at their own niche audience. How many people do you know actually seek out the reports from securities firms online? Those reports aren't designed for the general public. Additionally, companies like Northeast Securities, where Peng works, aren't among the top domestic brokers and don't have state-owned backing. They need to build their reputation, and when they speak, they must be accountable to their clients. Poor performance could lead to their jobs being on the line. On the other hand, take a look at the renowned state-owned securities firm China International Capital Corporation, CICC. Their economic predictions are almost always off the mark year after year, and they tend to be strongly pro-government. Why? Because they have a political agenda to uphold. As a state-owned enterprise, they don't have to worry about the business performance, which is a hallmark of such companies. Finally, let's discuss whether Xi Jinping has really lied down flat. Recently, he's been quite elusive lately, with no Politburo meeting held in November. There's a talk that the Central Economic Work Conference might be moved up in December, but the foreign media reports suggest it will still take place around mid-September, as it did last year. It seems like Xi Jinping isn't in a rush to introduce any major economic stimulus. Many are now speculating that he may have simply given up, thinking that since communication with Trump is off the table, the US-China trade war will likely escalate next year, the yuan will keep depreciating, and economic growth will continue to slow. So he might just choose to lie down flat, accepting the situation and forego any big moves. I personally disagree with the lie down flat theory. Just look at how the state-backed institutions are still trying to keep the Asian market above 3,300 points. If they were truly lying flat, why would they be so actively involved? They could easily let the market dip to 3,000 points and harvest another round of retail investors. This suggests that Xi Jinping hasn't given up on his economic goals. He's likely just carefully considering what strategy to implement next. The Wall Street Journal recently reported that Xi Jinping has been studying how Russia dealt with Western sanctions during its invasion of Ukraine, possibly seeking to learn from their approach. I suspect he's preparing for the worst-case scenario. If relations with China and the U.S. fully collapse and decouple, Xi Jinping must turn Taiwan into a bargaining chip, escalating the Cold War into a hot one. While the U.S. economy and the stock market are fueled by AI, China could target your chip industry. If you are not going to let me thrive, I'll create trouble for you. This might be a subtle warning through foreign media, sending a message to Trump. If you keep pushing me, I'll show you the consequences for your AI and the stock markets. In the US, the president can serve a maximum of 2 terms, while in China, the Communist Party stay in power indefinitely. We can always make our people endure more hardship, even if it means millions starving or resorting to desperate measures. Try that in the US. If people can't afford the steak, your political career might not last long. So, while Xi Jinping is studying Putin's approach to hard wars, once he's finished, he'll likely return to focus on China's economy. After all, whether or not there is a war, money still has to be spent. And right now, all economic control rests with him. Without his direction, no one dares to take action, which has led to a sort of policy vacuum in China. The capital markets are waiting for a major economic move. A share can't rise without stimulus. It's like the medicine can't be stopped. It's difficult to expect Xi Jinping to come up with any major moves right now. Where would these big plans even come from? Everyone is speculating about next year's deficit target, as there aren't many other options left besides issuing more government bonds. But even if the deficit target is set at 4% next year, it would only add an extra 1 trillion yuan to the budget. What can that really achieve? While I doubt there will be any major economic moves, the central bank has recently indicated it will continue with monetary easing and interest rate cuts next year. This suggests they are preparing for a significant depreciation of the yuan. As for Xi Jinping, whether or not he introduces new policies, the economy won't see much stimulus in the coming year. So he's likely to shift the focus, perhaps by provoking the U.S. or escalating tensions over Taiwan. This will make the need for intensified patriotic propaganda even more essential. As a result, I believe he's likely to tighten control over speech next year. The more China's economy deteriorates, the less likely he will be to ease restrictions on public discourse. Economists who are currently outspoken may find themselves banned from social media platforms, and the brokerage internal reports will likely be suppressed from widespread circulation. I suspect that Peng and his team have already been warned, and that there is a real chance their jobs could be on the line next year. After all, Xi Jinping is known for scrutinizing the past 30 years. Thank you so much for watching. If you find this video helpful, please like it, drop a comment below, and hit the subscribe button right here. It really helps YouTube suggest my video to others. I'll be back with more content soon. Until then, be well.